I'm Natalie MacDonald, bringing you the weekly wrap-up where we take a look at the big market movers of the week. On the phone with me now is Anders Svendsen, Chief Analyst at Nordea Markets. Anders, what to your mind has been the big event of the week?
That is, in my view, clearly the Fed meeting. I think it was maybe not a major surprise that they moved on to the quantitative targets, but the timing at least was slightly faster than we had expected. I think this is really something that will shape also the coming years.
The Greece agreement was an event which certainly marked a new chapter for the region. Many euro optimists will now infer that the euro crisis is on the path to recovery. Is this the case, or do we still have other Greece scenarios waiting in the wings that also need dealing with?
I think we are on the right path. Politicians have clearly stated that they will do what it takes to, as the Spanish Prime Minister said today, leave no one behind, and I think that's really crucial. When that is said, of course, next year will be very much about a two-speed Europe. Still, we will have, as I see it at least, extremely weak growth in the periphery, and we'll have signs of overheating in Germany already in the second half of next year. House prices are rising fast. Inflation may start to pick up in Germany as well. So you really have sort of tensions within the euro area next year. And at the same time, of course, you have the ECB that has one interest rate, and they, as I see it, have little choice but to choose to help the periphery rather than to slow the German economy. So that will, of course, help a bit. And then you, of course, have the elections on the German parliament and also in Italy. That will mean more or less no major solutions to anything next year in Europe. So sort of all of that together, I think we will have a lot of tensions next year in Europe, and I think we can easily see volatility because of political comments of one and the other direction. But when push comes to shove, the politicians will face up to the challenge and save anybody that is in need of saving.
As you've already mentioned, the FOMC meeting marked positivity for the US. The US government has been accused of over-dramatizing fiscal cliff negotiations. What impact is this having on market confidence?
I think there's a very high degree of confidence still around the Fed. Maybe slightly contrary to the ECB. The markets are really, I think, confident about the Fed, and I think that is also what you could see this week. There's of course disagreements about what is the right direction and so on, but there's little doubt that the Fed will do whatever it takes, and that is also maybe important in this respect. Now we have some nominal targets, but everybody knows that if it turns out that more is needed, then the Fed will do more. So in that sense, I think the Fed is really giving a lot of confidence to the market, and that is of course also needed because you have the at least fiscal cliff risk just around the corner.
And looking ahead to next week, Anders, what events should Dukascopy TV viewers be watching out for?
On the key figure side, it's not a major week. There's IFO from Germany, which I think will be a positive surprise along the lines of today's PMIs. And then, of course, there's minutes from the Bank of England, which may not be that interesting in my view, but everything will from now on be about the fiscal cliff. So I think whatever comments that we hear from politicians in the US, that will be the key for the markets. And if we don't hear anything, then it will be, I think, a quiet week.
Great talking to you. Thanks, Anders. That's all for now, but before I go, here's a look at some of our guests' key quotes of the week. Goodbye and have a great weekend.